Hello everybody and welcome back. In this video I will review the latest earnings report from Landbridge. They just reported a few days ago the third quarter of 2025, and in this video you will know everything. This is the only video you need to understand what is happening with Landbridge. Why is the stock up or down? Is this a good company? Did they deliver? Did they underpromise, overpromise, underdeliver, overdeliver? And is this a good investment for the future? So we'll talk about the valuation, we'll talk about the growth opportunities, because this may be my favorite AI investment. Landbridge is a company that is misunderstood by a lot of people. People don't want to do the work on Landbridge, and this is what you are watching this video, because you want to get more interest, more information about this. So what will we do in this video? I want to comment on the earnings report. Okay, I have a few notes here. I want to comment on some specific things, some specific lines in the financial statements, so you understand very clearly what is happening with Landbridge. Second part of the video, I want to share with you some notes I had, some elements, some cross-reading between different companies, and we will talk about many things on this video, right? It will be the most complete video you will watch on Landbridge. I have some screenshots from the earnings call. I have some investors that are buying Landbridge. Pretty interesting. So it will be an action-packed video with everything. I hope you will like this format. And I think we can start. And I want to start with the report. In case this is your first video from this channel, welcome. My name is Christophe Noor. I'm French. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year, including this year, by the way. So yeah, I know Landbridge quite well because I was a shareholder of TPL, Texas Pacific Land. So I have to put this disclosure first. If you look at TPL and their stock price, I bought TPL in 2020, sorry, and I sold at the top. I multiplied my wealth by 8 because of TPL, and I sold at the top. And after selling TPL at the top, I waited a little bit and I bought Landbridge. Landbridge can be seen as another TPL, Texas Pacific Land, because the two business models are very similar. These two companies own lands in Texas. And this is the end of the business model. This is a royalty company. These two companies are royalty companies, and you don't have any costs. You don't have any employees. You don't have any capex. And you just benefit from more royalties every year. So TPL is focused on oil. Landbridge is focused on water. And you have another difference. The TPL's management team is quite poor when it comes to capital allocation. It's more passive. And the management team for Landbridge is more active, more competent. They execute better. So they focus on more acquisitions, getting more lands, doing more deals, more partnerships, etc., etc. But the philosophy is the same. Landbridge is a royalty company revolving around water, not oil at all. So let me start with the first description of the company, and then now the report. Okay, Landbridge announces the third quarter 2025 results. Obviously, the growth is immense. The revenue is growing 78% year on year. It's normal. They have made a huge acquisition. Okay, first thing that is a positive, it's also a negative, because the company doesn't give us shareholders the mix between organic growth and non-organic growth. Okay, I'm saying shareholder because now I am a shareholder. It's 5 or 6% of my portfolio, full disclosure here. We don't have the split between the acquired revenue from the acquisition and the organic revenue growth. We can spot this with the volumes, but we don't have this. Anyway, the revenue is growing 80% per year. They just announced an acquisition, a new acquisition for more lands. Exactly as I said at the beginning of the video a few minutes ago, they want to get more aggressive with more lands. In the past, Landbridge was very small. It's a company that was founded in 2021. They went public in 2024. They used the proceeds from being public from the IPO to acquire more lands. Seems like they want to continue to take a little bit of debt to acquire more lands. And if you acquire more lands, you allow more drilling, more water handling capacity, so you can increase your revenue. So the more acquisitions they are making, the more revenue you will have. This is why the revenue is growing 80% per year. So what is green is good. What is pink is bad. This is how I can explain my comments here. Revenue, 80% growth, immense growth. They did a good acquisition, very good. Very good to see this happening. They declared a dividend, which makes no sense whatsoever. I hate to see this. Landbridge is a growth company, right? So you want to use all your cash to make acquisitions. You want to use all your cash to do smart things. You are not a major company that wants to give dividends. I mean, declaring a dividend shows you don't have any reinvestment opportunities. It is not true for Landbridge. They have many reinvestment opportunities. And I believe they are paying a dividend just to attract investors, specific funds, okay? Which is quite bad. You don't want that. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Okay, let me scroll down and see all the financials. I will first talk about the numbers and then we'll talk about the qualitative analysis of the quarter. You are talking about a royalty business. Operating cash flow margins are at 70%. Free cash flow margin, 60%. First question for you. Can you name 10 businesses with a free cash flow margin of 60%? Would be very difficult to find this. This is the beauty of TPL, the beauty of Landbridge. You are talking about a royalty business model with extremely high margins, extremely profitable, and growing 80% per year. So an amazing opportunity here, an amazing business. They are talking about the acquisition. I will talk about this later, or the acquisition, blah, blah, blah. Okay, let's see what the management team has to say. Jason Long, the CEO of Landbridge, stated, "As we advance our business plan and trajectory, we have shifted the paradigm of active land ownership with the strategy that maximizes the value of over 300,000 optimally located and largely contiguous surface acres. We have already established partnerships with industry-leading operators and developers that provide reliable and diverse revenue streams and have only scratched the surface in terms of the many compelling opportunities we are evaluating. It is true. It is only the beginning. Landbridge is young. Landbridge is 4 years old. It is only the beginning. And they are doing many deals at the same time. Where do you think Landbridge will be in 10 years? In 20 years? What if they succeed? Their plan is very simple. And they have said this for years now. Landbridge owns lands. They want to be a royalty hub in Texas. They want to be to have what they call powered lands. They have powered lands and they want a little bit of solar panels. They want a little bit of oil. They want a little bit of water. They want a little bit of data centers. They want a little bit of energy deals. You get to cut out of all the electricity that is generated on their lands. So a little bit of everything, a diversified revenue stream coming from many sources at the same time. And at the top, you will have Landbridge that will collect all these royalties like an octopus, and they will generate many revenue streams. Landbridge is only 4 years old, and so far they are executing. You have deals. They are not failing. So it's very bullish if they can execute in a few years to see what they will do in the next 10 years. So far, so good. Landbridge provides our business partners with unparalleled access to expensive surface acreage for conventional and alternative energy development, digital infrastructure build-out, power storage, waste management, and many other commercial uses. You can do many things in Texas. And you have, I will talk about this later, but let me spoil you the fun a little bit. As I'm recording this video, Google just announced more data centers in Texas. A few months ago, people said Texas was underdeveloped, but the reality is you have many data centers in Texas. And Texas is maybe the most promising state in the US when it comes to growth in data centers. They are very welcoming when it comes to data centers. And Google just announced a $40 billion investment in Texas in the form of 3 data centers in West Texas and this. So it is not on Landbridge's land, but it is increasing the value of their lands. Texas is welcoming more and more data centers. Where do you think this trend will go in the next 5, 6, 10 years? You will have more data centers in Texas. Eventually, maybe you will have some data centers in the Permian Basin. Maybe, maybe not. But it is, all these press releases increase the likelihood of more data centers in the Permian Basin. West Texas is the new London county. I don't know this one. Data center capital. Land prices gonna keep soaring. Yes, it's getting more interesting for all the landowners. Okay, the CFO now says we are a high margin, highly capital efficient and asset light business model. Yeah, a royalty business model. Let me scroll down. I don't want to waste your time, so I will just focus on what is important for the report. I don't want to spend any minute on what is not important. The key is to differentiate what is important and what is not important, right? Also, something that is new from this third quarter is a change in the outlook. Before, the outlook for Landbridge before this quarter was between 160 and 180. And now it's between 165 and 175. So they just had the same outlook, but reaffirmed the midpoint of the outlook. So no meaningful change in outlook at all. It's a little bit too early to have the guidance for next year, but I have my own formula that I will share with you in this video to have an estimation of the free cash flow for next year. I will talk about this in a few minutes so you can have a forward price to free cash flow and a sense of the valuation for this business. Okay, so EBITDA is expected to be here. Nothing is changing here. Let me scroll down a little bit. Okay, and see what we have for the income statement. Basically, as we started this video, the revenue is growing by 80% because of large acquisitions. Okay, fair enough. Everything is working in full force. You have this small line called other, called cheating, that is added. I don't know to what use. The management never speaks about this. This is the only bad thing I have found in the income statement. Because what is this line? It's $2 million. For what? We don't know. For the rest of the income statement, everything is clean. Everything is good. Everything works fine. Everything is growing. Everything is profitable. You don't have many businesses with this kind of profile. Let me scroll down about the balance sheet now. Okay, they just announced an acquisition, as we said at the beginning. More acquisitions for more lands, and they say that cash will be used and equity will be used to fund this acquisition. They also say we will use debt in the future. So as you see this line in the balance sheet, you have this green line here because on a year-on-year basis, on 9 months basis, the debt is going down. Maybe some people are watching this, are looking at this balance sheet and they say, oh, debt is down. What a lovely capital allocation decision. Don't kid yourself. The debt will go up meaningfully in the future. They are just delaying the debt on their balance sheet, but they already announced it. So please don't see this as a green flag. I put this in green, but it's a fake green flag. Debt is apparently getting lower. I'm strongly forecasting debt will go much higher in the future. Debt will go up as they are doing more acquisitions. So for the asset part, nothing big. And for the liability part, that was the only thing that mattered. And for the equity, they are diluting shareholders. As I told you, they are making more acquisitions with more debt, a little bit of cash, and they are diluting shareholders from the number of shares that went from 200,000 to 250,000, 100,000. So, yep, more dilution for us shareholders. This is not good to see this. This is why I put this in pink. But this is a good alternative to debt, I would say. The number of shares will go up in the future. Also, same thing. Don't kid yourself. This company is just getting started and they want to be aggressive with more acquisitions. How will you fund the acquisitions in the future? More debt and more equity raises, more dilution. So yeah, in the future, you can expect more debt and more shares. Okay. Now let's talk about the operating cash flows and all the adjustments and everything you can have in the cash flow statement. Something that is pretty good is the SBC, the share-based compensation from the company. I remember vividly last year when I started the position in Landbridge, people said, Chris, you are stupid. This is an unprofitable company. The PE ratio is negative. You have so many costs. Well, if you had looked at the numbers, at the financial statements, you would have seen that all the costs that we had last year, 2024, were linked to the IPO related costs. So stock options, lawyers, all the accounting changes. So you had costs last year that were only happening last year. Now we are in 2025, you don't have this cost anymore. So now Landbridge is profitable. Now you can have a PE ratio. Now you can have a price to free cash flow that is more reasonable. Anyway, if you look at the stock-based compensation, it is dropping meaningfully from last year. Obviously, because last year was the year of the IPO. SBC is not growing. Very good. See page 10. I can do a small analysis on the SBC. Nobody on Twitter or on YouTube is talking about this. Here we go. So, this is your net income. Last year, as I told you, the net income was negative. You had a loss because of all the costs related to the IPO. In June 2025, so Q2, they were profitable. The net income was $18 million. In September 2025, so now, the last quarter, the net income is growing to $20 million. Okay, so the net income is accelerating, is growing actually. Is the SBC growing? SBC, stock-based compensation, that's the stock options, the free bonuses that you give to employees, management team, stock options, free shares that are given as gifts to the management team to reward the employees. Okay, is this growing? Is this line SBC growing at the same time as the net income is growing? If you look at the reality, last year in September 2024, the SBC was $10 million and you had a share-based compensation of 1,800 million, $1.8 million. Okay, so the SBC was extremely high if you compare to the net income that was negative. In Q2 2025, has this line gone up? Well, not at all. The SBC line has come down 9 million, 2 million. At the same time, the net income is growing meaningfully. And it was for the last quarter. Now, for this quarter, third quarter of 2025, the net income is growing, but the SBC line is not growing. Not growing at the same pace. Growing a tiny bit, but not at the same pace. The $9 million in SBC incentive units has gone up by 100. So 100 here. And this line share-based compensation RSU has gone down from $2.2 million to $2.1 million. So zero increase in SBC while the fundamentals are improving. And I can show you this so you understand much more clearly. Okay, where can I start? Where can I start? I can start with the revenue and we'll talk about the net income later. Okay, I'm on Fiscal AI right now. Wonderful website. if you like to use this website, I have a discount code in my description. And on this chart, I am comparing in orange the revenue for Landbridge, in blue the SBC, free stock options, free shares, bonuses that the company is giving to employees. What you can see is the orange line is going up and to the right, more revenue every quarter. Every candle here represents a quarter. So on a quarterly basis. So more orange line, more revenue, more revenue. Maybe for a growth-oriented company, maybe you would have seen the salary going up, the SBC going up. It is not happening. If you look at the SBC, stock-based compensation, this is not growing at all. The blue line is not moving. The blue line is flat. So the fundamentals of the company are improving. The company is growing, but the salaries are not growing. The stock options are not going to the moon. No meaningful change is this. This is very good news actually, because for most growth-oriented companies, yes, they are growing, but the bonuses are also growing. So you have cash that is leaving the company. I know that is non-cash, but I see stock-based compensation as a form of salary because that's bonuses, stock options, dilution for me, shareholder. So I don't like this blue line to increase over time. What is really lovely for Landbridge is the fundamentals are improving, but the bonuses are not growing. These are flat, completely flat. The blue line is flat. So you can compare the line SBC with the revenue, but you can also see the same phenomenon happening for the net income. Last year, the net income was $2 million and the SBC was $11 million. I remember very well at the time people said it's a value trap, growth trap. This company is a fraud. People, the company is run for the management team and that's it. It's a complete fraud. And now what can you see? You see a net income that is accelerating and will, in a couple of quarters, be equal. We will have the same net income as the SBC. The SBC is not growing. Where do you think the blue line will be in the future? Where do you think the green line will be in the future? I'm forecasting the net income will double in a couple of quarters and it will be higher than the SBC line. Very good news. It shows some discipline when it comes to capital allocation. The management team is aggressive. The management team focuses on expansion, growing, acquisitions, some dilution of shareholders, some debt, but they are not completely crazy. So this is very good news. This is very good news to see the SBC line not going much. Actually, for other companies like Salesforce, you have the same phenomenon. For companies that have printed cash and they need to be efficient, they do the same thing. So yeah, pretty good to see this happening. Next point, no capex. If you look at this line, capital expenditure, zero capex. They generated, look at this, in the 9 quarters from 2025, they generated $90 million in operating cash flows. And they used only $2 million for the capex. Zero capex. You have even a lower capex level compared to TPL. A very asset-light business model. It's a royalty business model. So no capex, no cost. And I have a pink line here, dividends. Well, you already know what I think about dividends. I think dividends are for mature companies that have no reinvestment opportunities. And the management team is stupid. If you're watching this video, please stop your dividend. They are paying dividends just to attract investors. I said useless dividends to attract investors. I know they want to be appealing. I know Landbridge is aggressive in their marketing. Landbridge wants to grow meaningfully and they want to attract outside capital. So they are paying a small, tiny dividend to attract specific funds so they can be included in some indices. Fair enough. I don't like this. I would have preferred to completely cut the dividend and focus on acquisitions. Okay, so I don't like to see this. I'm not making this video to only praise Landbridge. I'm also making this video to show you what is bad, okay? I already showed you some things. Dividends, extremely bad. Extremely bad. I want this to be cut as soon as possible. It will not happen. They will continue to waste this $50 million. And that's too bad. Too bad. Frankly, I hate to see this. Okay. Next. Nothing here. Okay, so that was for the report. You see a pretty good report after all. Efficiency, growth. No growth is in stock options, SBC, a little bit of dividends, that is bad. More dilution of shareholders, this is bad. And more debt in the future, this is also bad. Okay, now that we are done with the earnings report, let me talk about my notes, because this is where we will talk about the qualitative analysis. Now that you know the numbers, should you buy Landbridge? Very good question. Okay, I have written a title for this Miro called Why Landbridge is my #1 AI investment. You have a massive update this quarter. Let me do a quick recap in case you are not very familiar with Landbridge, and then we'll go deep, okay? What makes Landbridge different? They have 300,000 acres of contiguous land in the Permian Basin. It's not a passive land owner like TPL. They monetize surface rights, pore space, and power potential, and they focus on acquisitions. Most revenue doesn't come from all royalties. Only 7% of the revenue comes from oil. Key difference from TPL. For TPL, Texas Pacific Land, the majority of the revenues comes from oil. Okay, more than 50%. For Landbridge, it's only 6-7%. Focused on long-term secular themes, as they said in the press release. They focus on water, on power, and land monetization, and it is only beginning. It's very bullish if they continue to execute similarly for the next 10-15 years. I own Landbridge. It has gone up, so it should be like 6% of my portfolio. If they fail about their strategy of acquisition, if they fail, it's only a small part of my portfolio. I can lose 5%. This is it. It's fine. But if they succeed, and if they execute well, they have a vision, if they execute successfully, as they are doing right now, Landbridge is a 10x. It's the only company I have in my portfolio that has this potential of growing immensely in the future. I bought the company, the market cap was $4 billion. It can be, in a few years, $40 billion because of the potential and the growth rate they can have in the future. TPL has a market cap of $20 billion. So it's not completely crazy to think that a similar company in 10 years can grow to $20 billion, $30 billion, $40 billion. It's not completely crazy to think this if they continue to execute well and grow at a very nice level. Okay, the water bottleneck is the core thesis. Most of the revenues from Landbridge comes from water, okay? Every barrel of oil, that's up to 10 barrels of toxic water. So you have a huge disposal demand, and their lands benefit from this. When you have some fracking activity, when you use a lot of water to cut rocks, you are you are left with wastewater. What do you do with this dirty water, with this wastewater? Either you can recycle it, you can't. TPL is working on this, but it's very unlikely. There is no technology right now to recycle this dirty water. Or you store it on the ground. And Landbridge is doing this. So this wastewater, this toxic water, is just stored on the ground. And every time it is stored on the ground, Landbridge gets a royalty. And based on their location, Landbridge has very good lands to store all this wastewater. You have a huge demand in the future. They are talking about this on their slides. If you look at the Let me show you. On the slides at the end, they added new slides from Landbridge third quarter. Here you go. Over pressurization will limit future disposal capacity in the Delaware Basin. And they talk about the future demand of water and the exemplary position they are in. Okay? So anyway, I made a video about the earnings call a few days ago, in case you want to watch it. Yeah, you will have my reaction to the earnings call because we are listening to the call together. I made a video a few days ago only for people that are members of this channel. In case you want to support this channel, you can become a member. It's the price of a coffee. The minimum price is the price of a coffee, and you will do exclusive live sessions. You can ask any question you want, and you also have exclusive videos if you become a member. Okay, so you have different tiers. You can click on join just below this video and see what you got. Okay, Waterbridge partnership is key. They use Landbridge land for pipelines and disposal. Waterbridge is a water company. They are the one who are doing the heavy lifting with all the costs, all the manpower, all the capex. Waterbridge is linked with Landbridge. Okay. Fun fact: they have the same CEO. Well, that's a conflict of interest for good reasons. Waterbridge is working with Landbridge because Waterbridge is using Landbridge's lands. Waterbridge is the company that is doing all the cost, all the capex, and they do everything on Landbridge's lands. So Landbridge just enjoy the royalties, enjoy the development, enjoy the additional capex, and they get new revenue streams. As Waterbridge grows, Landbridge grows. And Waterbridge just became public. They just had an IPO a couple of months ago. So now we have access to the financial accounts. We can have more visibility. I'm talking about this later. Okay, Landbridge's land avoids high pressure zones, less regulatory risk, more infrastructure potential. Well, we've said this with the slides before. The demand for disposal space is outpacing supply. You have a strong pricing power. Exactly what they say during the call. Let me continue. With Landbridge, you have most of the business that is water. What if you have a massive optionality from surface operations? They have a strategy that is very clear. They want to create a hub in Texas. You have this strategy of the powered land, the powered land thesis. The goal is to attract energy intensive tenants from solar, crypto, and data centers. And so far, they are doing it. So far, they are delivering great news. They just signed a solar deal for 3,000 acres. So it will monetize their land. They just had a new lease for gas infrastructure. They just had a potential deal with energy for 1 gigawatt of energy, likely tied to future data centers. I think they announced 2 mega deals for intense energy needs. So maybe that's quite telling. First, they announced 2 mega deals for energy to host what? Data centers? Maybe. They make everything to be as welcoming as possible for data centers. And maybe this will be the future of Landbridge. If there is one data center that comes to their lands, more will come. The hardest one is the first one, actually. If there is one data center that comes to Landbridge, more will follow. But the hardest part is the first move, actually. Okay, fourth point, data centers, the market's blind spot. The market sees Landbridge as the maybe AI play, but the real value is already here. TPL, so the other royalty company, Texas Pacific Land, confirmed the data center interest in West Texas in the third quarter 2025, the earnings call. See screenshot. Okay. A few days ago, TPL reported earnings. They reported very good earnings. The stock was up. Okay, fair enough. And during the call, they announced things that were very bullish for data centers, meaning data centers are coming. And thanks to this news, thanks to their comments on the earnings call, the price of Landbridge shot up meaningfully. You can see here on a year-to-date performance, you get this, boom, from $60 to $80, boom, in 1 week, just because of this small comment in TPL's earnings call. Let's see, this is the first screenshot here. Let me read what TPL has said during the latest earnings call. Okay, perfect. Maybe for just a second question on the power side of things, just power data center type of conversations that are occurring. How do you all feel about your position in terms of being able to participate out in West Texas versus say a quarter ago? Just given the expensiveness of your footprint, any sort of color you can provide in terms of which areas seem more prospective for getting such deals executed on. Are data centers coming? Are you having discussions with data centers providers? And TPL says, yeah, sure. Thanks for the question. Look, we feel like TPL is very well positioned. We have all of the attributes needed to be very attractive to power generators and data center developers, hyperscalers. I think we've probably got more available land with those attributes needed than anyone else in West Texas. It's true, they have more lands. They have 900,000 acres of land in Texas compared to Landbridge with 300,000 acres. So TPL is 3 times bigger than Landbridge. I think West Texas is quickly becoming more and more popular as an area to build out multi-gig facilities and campuses. Well, did Google just announce this? West Texas, Google just announced a new data center in West Texas. It is coming. It is coming. You don't know when exactly, but they will come eventually. I would just say that we continue to have really good conversations. I think we are pretty close on a couple of opportunities that are very interesting. Hopefully, we'll have additional news to share here in the near future, very near future. This is the most bullish comments TPL has said publicly because I follow TPL. I have been following TPL for 6 years now, and I track every earnings call. And if you look at the past quarters, they had some positive comments, but not so positive. So extremely bullish comments when it comes to data centers for TPL. That was for the first screenshot. Don't worry, I have other screenshots. I told you, this is the only video you need to watch to really understand the whole ecosystem for Landbridge, TPL, what everything is happening at the same time, right? This is the only video you need to watch to really understand this. By the way, if you like this format, you can leave a like, leave a comment below, share your thoughts on this format because it's quite new on my channel and I really enjoy doing it actually. A complete format. I mean, this is the video I wish I watched before investing in Landbridge. Okay, so this screenshot, this is the first one. Landbridge is further along. They mention multiple blue chip counterparties in advanced discussion. This screenshot, okay? Now we are talking about the earnings call for Landbridge, what they have to say. So here is what they have to say for Landbridge, right? Not TPL, Landbridge. Thanks, Scott. Appreciate those comments. Maybe just second one from me. Understanding your guys aren't really ready on this call to talk about anything kind of formal on the power side. I guess if you look more broadly compared to a year ago, we are starting to see a bunch of kind of power and data center projects pop up kind of more formally across the Permian Basin. Can you just walk us through one more time when you guys are having those conversations? What are you saying you're bringing to the table relative to some of those other kind of locations or partners out there? Here is the answer from Landbridge. Yeah, I mean, the announcements that have come out recently are no surprise. I mean, the economic fundamentals of the West Texas just made that inevitable. As I've said before, it was always a when, not if discussion, and we are starting to see those come to fruition here. I mean, from our seat, we are further along into existing conversations and also engaged with a number of new blue chip counterparties in these discussions. We are very excited and very optimistic about the progress we are making, and we look forward to sharing new milestones when the time is right. Second, bullish arguments for data centers in the Permian Basin. So They don't announce anything, but they say they are in advanced talks. What if they announce a new data center deal? Not now, in next year, in 12 months, in 18 months. They are talking about data centers more and more, and this is maybe the most bullish earnings call we had for Landbridge when it comes to data centers. Okay, Landbridge land is contiguous. That's a big edge over checkerboard land owners like TPL. Yeah, sorry. If you look at TPL and their lands, you have for Texas Pacific lands a little bit of here, a little bit over there, a little bit over there. It's like a checkerboard. For Landbridge, they are making acquisitions to have contiguous lands, big blocks of lands, which is much better if you want to have a mega hub, right? You have your data center, you have your power plant, you have your water consumption for all the cooling equipment, etc. You have everything that is in a big chunk of land. So if you really want to welcome data centers, maybe Landbridge is better. They have a better quality of lands because that's a big block of land, and they already have the water infrastructure going on because they are working closely with Waterbridge. So yeah, maybe Landbridge is a better bet for data centers than other people like TPL. Google is investing $40 billion in Texas data centers, confirming the state's pull for AI infrastructure. Landbridge owns strategic land in West Texas suited for energy and hyperscaler needs. Demand is for land, water, and power, not oil. Landbridge leases all three on fixed terms. If there is a data center, you will have many new revenue streams for Landbridge. From the use of the land, the electricity from the power, all the equipment, all the manpower, they will get many new revenue streams. This is not priced in. The move supports Landbridge's shift into digital and infrastructure leasing platforms. Also, Larry Goldstein doubled his position. Who is Larry Goldstein? That's a very good question. Larry Goldstein is a super investor. It's an investor that has been following TPL for more than 70 years. Larry Goldstein, Lawrence Goldstein, is an investor with a great performance. He has bought TPL more than 75 years ago. So he knows TPL quite well. He has a fund called Santa Monica Partners. I had a screenshot here of the fund, but I have the website here. You can go to Well Wisdom and check his fund, check his portfolio. And you will see that TPL is here. He has first bought TPL 75 years ago. He's still holding. That's 30% of his portfolio. And guess what? A few months ago, he started a position in Landbridge. So one of the most expert guys in the world when it comes to royalty plays in the Permian Basin just opened a position to Landbridge. And guess what? Every year, he asks a question. If you look at the Q2 2024, so the first earnings call for Landbridge, you had a question from him, Lawrence Goldstein. And then he goes silent. You wait 1 year, in the second quarter of 2025, Lawrence Goldstein had another question, one question per year. And the question was very good, and Mr. Goldstein was upset. The question he had 3 months ago was, guys, the data center industry is booming. Why don't we hear a word about the Permian Basin? We have data centers here, and nothing on your lands. So what is happening, guys? Well, I have the updated portfolio from after this call. The updated portfolio is he doubled his position in Landbridge. It's only a small part of his portfolio, but he doubled his position in Landbridge. So one of the most expert guys on TPL, he knows the royalty industry very well. He knows the Permian Basin industry very well. Royalty King very well, is upset about Landbridge, but he just doubled his position. What does it tell you? Yes, he has doubts. Everybody has doubts when it comes to Landbridge. It's not a guaranteed business model, guaranteed profits, guaranteed 10x. But if Mr. Goldstein is doubling his position, that gives me a lot of confidence. As a shareholder, I love to see this move. He's questioning the management team. He's upset. He asks hard questions, but he's buying more. But he's buying more. So actually, I like it. It's a very, very, very positive piece of news. Okay, so that is for this screenshot. I'm out. I told you, this is the only video you need to watch. Let me continue. About the financials, let me do a quick recap. Am I done with the... I think I have 2 other screenshots to show you. You know what? I can show you the screenshots now. Okay. These are other screenshots I took from Landbridge's earnings call. Hey, good morning. Just a question for you. 2 questions. First, just going back to the number of people talking about building power data centers in West Texas. Is this one of these things like sort of fields of dreams? If it's built, the hyperscalers will come, or are the hyperscalers already committing that they want to access West Texas? Therefore, it's just a matter of people coming online and building the facilities, and then the hyperscalers will be there. I'm just trying to figure out who will come first. Either you have the power first, so you can welcome more data centers, or you have data centers that just pledge to come, and the power will come. Who will come first? The power or the data centers? Who will come? Good question. And this is the first time they say this. Like last quarter, they didn't say this. So maybe it's quite new. So what is Landbridge answering to this? Yeah, I think the kind of chicken and egg dynamic you're speaking to was more prevalent last year when West Texas really kind of got on the map, so to speak, when it relates to data centers. I mean, the engagement we've seen, call it, over the last 6 to 12 months has shifted a bit, where typically these hyperscalers or the data center developers and operators are partnering directly with power providers. So it's not who will come first. They are having a big bundle and coming directly. Okay? It's more of a package negotiation, not necessarily waiting for the power to be committed to in the hopes that the data center comes. I would say it is a much more sophisticated, call it packaged approach now. As a result of that, I think you're seeing just a lot more willingness for folks to kind of move quickly and get those projects across the finish line. They are saying a few things here. One is, I don't know who will come first, now it's a package. And 2, things are accelerating in the last 6 to 12 months. They are having more and more conversations to welcome these data centers. So extremely bullish. And I have the last screenshot here. Or I will mention this later. Okay, go back to the notes here. So that's a quick recap on the revenue that is up 80% per year. Net income, you have a nice fat 40% margin. Adjusted EBITDA is up. You have a strong margin. Free cash flow, strong margin. Cash from operations from the quarter, very well. This is the 6th straight quarter of a profitable margin-rich growth. About the revenue breakdown, if you look into the different segments the company has, everything is growing. This is the spoiler. Everything is growing nicely. All the royalty streams are growing nicely. So yeah, you have this line, as I pointed out before, called other revenue of $1.7 million. A new line, so a little bit strange. You want to double check what is happening here. Also, during this quarter, the company had an acquisition, the 1918 ranch, so 30,000 acres of new lands, and they expect this new acquisition to generate $20 million in EBITDA for, I think that's for next year, for 2026. Okay. And scalable to $50 million. So they just acquired more lands and they want to increase the monetization of this land, right? So it will be accretive to more EBITDA, more free cash flow next year. But as years go by, they will increase the monetization and it will not only generate $20 million, it will generate $30 million, $40 million. And the management thinks it will go up to $50 million. When? Nobody knows. No capex needed to monetize, so it's an asset-light business model, high-margin business model, and the SBC is not growing. See screenshot, well, I already talked enough about this one. I can remove the screenshot. The SBC is not growing, which shows some efficiency. And you have some recent deals. So the acquisition of 30,000 acres, mainly for pore space and alternative energy development. You have a solar project, a deal, 3,000 acres, sold for upfront cash. So they had a little deposit of cash, plus milestone-based payments that will add another revenue stream to Landbridge. And you have a new long-term lease for natural gas facility. Eventually, you will have more deals, more conversations to have this dream of the powered land thesis. I'm calling it dream because it's not real yet, but it is starting to becoming real. So a few years ago, the management team from Landbridge was very clear about their intentions. We have lands, we want more lands, and we want powered lands. We want to have this huge ecosystem. It seems like they are having more and more deals, so this dream is becoming reality. It's only the beginning. I'm not getting too excited. You have a handful of deals, but where will we be? Where will we be, right? In 3 years, in 5 years, they will have more deals. They will have more optionality. They will have more projects. They will have more revenue streams. If the management team executes well, it's a lovely opportunity. It's a lovely business. And so far, the management has underpromised, over-delivered. They are doing much more than expected. They are growing much more, and it seems like things are accelerating when it comes to their data center expansion plans. Okay, let me continue. Actually, you have a new deal with the Waterbridge and Speedwell, but we'll see this for next year. Waterbridge is a company that is public now, so we have more details about this one, and they will handle more water. The capacity, the volumes of water will increase. And if you have more volumes of water, Landbridge will get more royalty, okay? More royalties and more revenues. About the balance sheet, nothing really great, nothing really bad. It's a normal balance sheet. The debt level will increase for Landbridge. And about the outlook, okay. Outlook, as we said previously, Landbridge reaffirmed its EBITDA guide of $170 million. Pipeline of deals building, more monetization ahead. They have an implied 2026 EBITDA guide of $200 million. Okay, my formula is they will have a generation of 100 and let's say 60 or $70 million in EBITDA. The new acquisition, the recent acquisition will increase the EBITDA by $20 million. So you go from 170 to 190. You will have more monetization, more volumes from more water from Waterbridge. So you can easily have a guidance of $200 million in EBITDA for next year. You are being a little bit conservative here, so organic growth of 10% and $20 million from the new acquisition. If you use the 75% conversion rate, EBITDA to free cash flow conversion, like TPL and Landbridge is doing the same thing, you can assume $200 million of EBITDA will mean $150 million in free cash flow in 2026. And now the market cap is $5.6 billion. So now, today, you have a forward price to free cash flow of 37. It is a premium valuation for a premium business. And that's why it's only 6% of my portfolio and not a core holding. It's maybe the most speculative play I have. But guess what? A few weeks ago, the stock was down. A few weeks ago, the stock was not trading at 74. A few weeks ago, the stock was at 50. Which means the forward price to free cash flow was not 37, was not 30. The forward price to free cash flow was in the 25, 26, 27. You could have bought Landbridge, a promising company, asset light, no capex, no cost, with a call option on data centers that is growing meaningfully, with a very good management team executing very well at a forward price of free cash flow of 25, a potential 10 bagger. Nobody wanted to touch Landbridge a few weeks ago. I was buying. I bought more on the way down at $60 and I bought more at $50 on the way down. And now I'm suggesting if the stock goes up from there to 80 to 90, people will chase Landbridge and will say it was too obvious. Well, it was not obvious at all. The company was attacked by a short seller called Gotham Research during this summer, and people said Landbridge was a fraud. We will see. Nobody knows. Maybe it's a fraud. Maybe not. We will see. Act accordingly. I'm making this video not to convince you to buy or to sell. I'm just here to give you the information and you decide. I mean, officially, I can't tell you what to buy and what to sell. You do whatever you want with your capital, but I'm here to show you the information, to show you the way, and to show you how I analyze Landbridge. Because this is this kind of analysis that allowed me to make 25% per year. It's not by being narrow in the analysis. No. You go deep, you monitor everything, you cross-read all the informations, the super investors, the different companies, and this is how you can make an informed decision, right? Speaking about cross-reading, here is a cross-reading with Waterbridge. Waterbridge is now public. Okay, now let me... you know what, I can explain. Waterbridge is public. Waterbridge is the company that operates all the water, that is having all the cost, all the capex, and Waterbridge is using the lands from Landbridge, right? It's now public. They had an IPO a couple of months ago. When was the IPO? September 2025. And because it's public, now we have much more information. Waterbridge is Landbridge's key commercial counterparty. The revenue is up. They handle a lot of volumes of water, and we have more transparency now. So we can do better cross-read on Landbridge's royalties. Now we have access to the financials for Waterbridge. We know their capex, their expansion plans, the growth rate, the balance sheet. We know that they went public to raise capital to have more capex, more expansion plans, is including new pipeline projects. And if you have new expansion plans, new pipeline projects, where will these projects go? On Landbridge's lands. Who will benefit? Landbridge. Who will have more royalties? Landbridge. So Waterbridge is now public. You have more money, more cost directly into the bottom line of Landbridge. It's actually very bullish that Waterbridge is public now. It's bullish for us shareholders of Landbridge. Because we have more visibility, we know Waterbridge is not a fraud, they will survive, they are growing, and they want to grow more, so they will need more capex. New pipeline by Waterbridge boosts surface use income, yes. Okay, now what to watch? Milestone payments for solar project, lumpy but material. Yeah, we want to see how the solar panels are operating and what are the new revenue streams. We want to see the ramp up in more water volumes that will increase the royalties for Landbridge. We want to see the execution of new leases for storage, digital infrastructure, and data centers. We want to follow up with the story of potential energy deals, data centers in Texas, in the Permian Basin. And we want any updates on alternative energy or waste projects. Bottom line, Landbridge is a high margin, capital light business model that is working. You have smart land monetization because now we have powered lands, solar, water, gas storage. Waterbridge visibility improves the forward-looking confidence. Now we know we have much more visibility for both companies. If they keep executing, this turns from niche value to long-term compounder. It's maybe the best AI investment I have in my portfolio. Because if they succeed, if they operate nicely, it's wonderful. And I forgot to mention this on my notes, on my bullet points, so I will mention it now. On this screenshot. Because last year, Landbridge signed an option with the potential data centers that signed $8 million. So Landbridge received $8 million upfront to potentially have a call option for a potential data center. We don't know who this data center client is. We don't know at all if it will come. $8 million, that's peanuts. So maybe they will just give up. The call option is viable for 2 years. And somebody, during the latest earnings call, asked about this call option, this $8 million project. So, okay, can we get an update on the existing data center deal that you did? I think it's been a few quarters since you received the initial deposit of $8 million. And I think 5 Point, which is the private equity fund behind Landbridge, Waterbridge, Powerbridge, so that's the mother company, is still in sort of that option window. Do you think they're close to getting everything signed and fully committed and rolling out? Or just what's the update on the process? Here is the answer from Landbridge. Yeah, just to kind of remind the group, it's a 2-year option period. That partnership between 5 Point and Commonwealth Asset Management, which also works in partnership with Cyber Lake, still active. I can't provide any specifics on where they are in their process, though. So, zero information. In case you were wondering if they had signed something or not, zero information. They had signed something last year, and we are still in this window of 2 years. Maybe in the next 12 months, they will sign a deal to announce something big. Maybe not. In any scenario, I will hold my Landbridge shares. I don't plan to buy more Landbridge. I don't want to make it a core position because, as I told you, now it has gone up. So it's maybe 6% of my portfolio. If the stock price goes up to 100, it will become a core holding because the allocation will increase as the price increases, right? I will not trim. And if the stock price drops back to $50, I will maybe buy more. But now the valuation seems a little bit rich. So yeah, just wait and see on my end. I don't plan to buy more, but the thesis just got better, way better. And this was the only video you needed to watch to understand what recently happened for Landbridge, all the updates, etc. I wish you a nice rest of your day. Goodbye. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a video, a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.